I will give a short introduction. My name is Michael Fuchs. I've been the lead consultant on this initiative since the very start. In fact, all the people you see on this slide have been working together on the initiative for a period of several years now. Some of us started somewhat earlier than others. After I have said some words, then Sladin Saidi of the Statistics Department of AFDB will give some comments in the way of introduction as well. Then Thorsten Beck, professor at Cass Business School, whom I'm sure is well known to most people listening here today, will give a brief explanation of the scoreboard. Then following that, we'll go into more depth on how the scoreboard was assembled and what results we have found up to now. And that will be presented by my colleagues Mustafa Buzaini, who's consultant at the Statistics Department at AFDB, and Jose de Sousa, who's at the Norwegian School of Economics. And finally, I will give a brief overview of the next steps we envisage, and then open the floor for questions. At this stage, I think perhaps it's a good idea that I hand this to our colleagues at my colleague Mohammed, who will give you an introduction as to how you can pose questions, because I think that's important to get that from the very beginning. Mohammed?
Michael, hello everyone. This is Mohammed Agrebi from Making Finance Work for Africa. A few words about some housekeeping items for this session. So today's session will last about 60 minutes, including Q&A session during which the main speakers will address your questions. Submit your questions using the chat panel or the Q&A features. If you would like to raise any question live or comment, please message me, the host, Making Finance Work for Africa, at the administrator, and we will enable your audio system. Finally, the slides and the recording of this presentation will be circulated after the session. And also, please remember to fill out the survey that will appear automatically in your browser. Back to you, Michael.
Thank you. So I'm now going to say a few words just by way of introduction to, and then I'll pass this on to others who will speak. Next slide, please. Thank you. Well, the foundation for the long-term finance initiative was really some frustration, perhaps, on the part of several of us about the focus of finance being very much on financial income. This has been, for several decades now, the main focus of the donor community, that more people should have access to finance. And our realization was that access to finance is only one, so to speak, one pillar of finance. And the other pillar very much is what finance was traditionally supposed to do, which was to allocate resources to their best productive uses, and thereby support, of course, investment in the economy and growth. So this is, to some extent, come out of that realization on our part. And we also felt that markets in Africa, and this is also a more recent discussion, that the capacity of local markets was fundamental to sustainable growth as well. And in that context, it would be important to look at what actually does exist in the form of long-term finance and understand it better, that aspect of finance in Africa. So we're looking particularly at SME finance, housing finance, and infrastructure finance in this project. We went about this in a two-pronged way, and you'll see this come through in this discussion today. The first being a scoreboard and a database, which is a database on what actually exists, what actually is out there, what information is available, and what information is not available. And the other thing we also have done, which we'll speak about much less today, is what we call country diagnostics in a few countries to see, well, if we were to try to change and to increase the availability of finance, long-term finance in these economies, how would we go about, what recommendations would we have to do that? And that is, as I say, something we'll talk about less, but it's also been a major focus of our work. Next slide, please. So there were kind of three aspects which I just like to emphasize by way of introduction to this. And we try to look at finance holistically. So we're looking at not just parts of the financial sector. We're trying to see how do they interconnect. And therefore, this was an attempt to look at, if you like, the sources and uses of finance in an abbreviated format, which we will come back to describe later in this presentation a bit more. So the diagram on the left is not legible here, but it will be in a later slide. It's also worth emphasizing from the very start that this has not been the initiative of any one party, but it's been a collaboration among several. And at various times, these different donors have played different roles, and so has the African Development Bank. But it's been supported very much by GIZ from the start and by the Financial Sector Deepening Trust for Africa, FSDA. And they are still the main funders of this initiative. Our aim here wasn't to speak to ourselves, and I hope that we're not doing that today either, but certainly our aim here is to create greater impetus for reform. We realized from the very start that this wasn't going to happen through talking only to public sector policymakers, but to engage with the private sector. And that is still the purpose of this exercise. So we're talking about the scoreboard here and the database. We're talking about an instrument which we hope will be as useful to private sector investors as it is to policymakers who are trying to change the environment, the framework in which to invest. So it's a very broad agenda from that perspective, and we have a broad audience in mind. So now in the next slide, I'd like to turn this over to my colleague, Sladin Saidi, who has worked at the works at the African Development Bank Statistics Department in assembling the scoreboard and has led that effort. And just to say a few words to outline the methodology behind the scoreboard. Saidi, could you briefly introduce the approach we adopted to identifying sources of data and the process of collecting data? Oh, I see. I've missed out. I'm sorry. I've missed out. I missed out a slide here, which is I've gone wrong in the agenda. So we'd like to say a few words before we do that on the Making Finance Work for Africa agenda. So let me. Sorry, I made a mistake there. It's Arno Flores who that from the Making Finance Work for Africa Secretariat. So Arno, you speak first, and then we can go on with Saidi without an introduction.
Right. Thank you very much, Michael. Hello, everyone. So this is Arno Flores. I'm the Financial Sector Advisor leading the Making Finance Work for Africa Partnership Long-Term Finance Workstream. So just a couple of words on the partnership and our approach to develop long-term finance across the continent. So the partnership is a multi-donor initiative, as you can see on the screen, serving as a platform for African governments, the private sector and development partners to coordinate financial sector development interventions across the continent. And the objective being to avoid duplication of efforts and maximizing the developmental impact. And we are hosted actually and funded by the African Development Bank, funded by the four other development partners you see on the screen. Namely the Agence Française de Développement, the GIZ, the German corporation, the Ministry of Foreign Affairs of Netherlands, and the European Investment Bank. We support the development of African financial sectors through the three priorities you see on the screen. So namely financial inclusion, financial stability and governance, and long-term finance, which I coordinate. Through the long-term finance work stream, we assist partners in developing and implementing long-term finance market interventions that are supportive of a sustainable and inclusive development of Africa's financial sector. And more specifically, we support the mobilization of long-term resources for investment with a focus on infrastructure and housing, and on the role of domestic external investors in the supply of long-term finance. So this is why we have facilitated the creation of the Africa Long-Term Finance Initiative that Michael just briefly introduced, of which this data portal and scoreboard are a major component. And the initiative has strong synergies with our current activities and is aligned with our efforts to supporting and developing financial intermediaries, their products and delivery systems, the markets in which they function, and the regulatory environment under which they operate. So that is in a nutshell what I wanted to highlight. Thank you very much. I guess now Slidin will present the methodology.
Thank you, Arnaud. Thank you, Michael. The Statistical Department of the African Development Bank has been strongly involved in this project to promote the long-term finance sector in Africa, which is closely linked to the 5 development priorities of the bank, the High Five. The first survey was conducted in the second and third quarter of 2018 among the central banks of the regional member countries and institutions responsible for regulating insurance activities and capital markets in Africa, in African countries. 46 countries participated to this first round. All the data collected constituted the basis of a first information platform dedicated to the long-term finance in Africa, comprising mainly a database and a scoreboard. The whole information drives analysis. Essentially, the system is based on regular survey that collects data and statistical information long-term within the statistical department, and in collaboration with the whole LTF team, our mission consisted in monitoring the entire data collection process. First, design of the questionnaire to target institutions in the countries and identify data gaps to be addressed from secondary sources, online databases, online documents, etc. Second, data collection and management of the survey process over the covered period. Thirdly, data control and storage, verification and confirmation of questionnaire adequacy. And finally, computation and validation of aggregated statistical indicators agreed as most relevant based on the information gathered. And finally, preparation of results and outputs from data mining. Benefiting from outcomes and feedback from this first round, some adjustments were identified and being made to the whole process before launching the second round and statistical data collection, which is scheduled for the fourth quarter of this year. Thank you. Michael, it's over you.
Yes, thank you very much, Saidi. Now we're moving on to a discussion of the background, the whole of the conceptual framework behind the scoreboard. And it's my pleasure to ask Thorsten Beck from Cass Business School to present this conceptual framework. Thorsten, given your vast research on financial sector development, you know the data landscape very well. What is the value added of creating this database and this scoreboard? Maybe you'll let participants know.
Yeah, so, well, thank you very much, Michael. So I want to first briefly discuss what is the database and what is it actually not. So what we really would like to see this scoreboard and this data portal as is kind of a go-to place, a overview of the long-term finance landscape across the continent, across different countries, and eventually also over time. And when I mean holistic, which used to be a very fashionable word a couple of decades ago, I mean really from the sources of finance to the users and also including the institutional framework. And I'm going to actually come back to this in 2 slides. What this is not is to kind of it's not supposed to be a website that you check the first thing every morning for updates. So it's not kind of daily data. It is hopefully will be updated on an annual basis, but it gives you kind of a general overview of where long-term finance provision in a specific country and across the region stands. In order to get there, we compile data on long-term finance from many different sources. Some of these sources are actually publicly available on other websites. Others we actually kind of got through the survey, as just described by Sla. In addition, we also provide a benchmarking tool where we don't, I mean, the usual way would be, the traditional way would be just to compare country by country and say compare Botswana with the Democratic Republic of Congo. What we rather propose is to have a model where we take into account the socioeconomic circumstances of each country, and therefore then kind of make these countries comparable across the region and over time. So kind of turn apple and pears and strawberries into apples, apples and apples. Yes, next slide, please. So we financial economists, we used to look at long-term finance little bit like the drunken car driver looking for his car key below the lamppost, not because that's why he lost the key, but that's because that's where the light was. And similarly, in African finance, we used to look almost exclusively to banks because that's where the data was available. But we know, of course, there are many other potential providers of long-term finance across the globe in advanced countries, but even including in Africa, and we know relatively little about them. Now, each of these different providers, these different markets, have their upsides, have their kind of advantages in terms of providing long-term finance, but also have their challenges. I mean, we know, for example, banking traditionally was not did not provide long-term finance, but actually short-term finance, and they still, even today, and more now today after the introduction of Basel III, face rather strict maturity mismatches and constraints on these, maturity transformation. We know we have public equity, we have public corporate bond markets in some countries. In many cases, and again, Jose later on will talk more about this, it's relatively underdeveloped. But where we know really little about is, for example, the insurance sector, or the contractual savings sector in general, which has long-term liabilities, and given this liability structure, should actually focus on long-term assets, even though they don't always do that. Private equity is almost like a black spot, which we know is happening, but we know very little about. And then, of course, there's the kind of new area of alternative finance provider, peer-to-peer lending, crowdfunding, and so on, which has started from a very low level. But again, we know little about it, and I think the jury is still out, but we would like to know more about it. Next slide, please. We take, as I mentioned, a holistic approach. We consider the sources that go into financial intermediation. We consider the depth of different segments and the use by household, governments, and firms, in addition to the institutional and the enabling environment. So that's kind of what I mentioned when I said the go-to place for getting an impression of finance in Africa. Next slide, please. This is the slide that you saw in a very small format earlier on, and Michael was already referring to. And this kind of actually elaborates a little bit on what I just mentioned. So we start out with having indicators on the sources of funding at different pools, such as domestic savings, such as the wealth, corporate earnings, but also international sources, both commercial and concessional. And then going from there into these different intermediation systems, both intermediated, so banking, for example, institutional investors, but also the markets. And of course, these are not separate from each other, but institutional investors, for example, often use markets to actually invest. Similarly, different financing forms, the traditional corporate finance, but also project finance, mortgages, and of course, the new form, crowdfunding, so direct finance. And ultimately, on the right-hand side, we also want to kind of capture the different uses of funding, such as for infrastructure, such as for real estate, housing for households, but also different in segments of the enterprise population, manufacturing, extractions, and in other sectors. Now, underpinning all of this, and we are of course aware that long-term finance is not standalone, but is supported by the institutional framework, by enabling environment, but also certain government interventions. And we know that from lots of research that finance, and especially long-term finance, is the most institution-sensitive segment in the economy. So here we kind of include indicators that captures the macroeconomic environment, that captures the contractual framework, but also information sharing, the different segments of that, but also certain government tools, certain policies, and be it again domestic governments, be it concessional and donor support instruments, including support by development finance institutions, but also certain tools such as risk guarantees, for example, or other policy tools. Slide, please. Thank you very much. So this was just to give you the overview. I guess you've been waiting for this for a long time now, but now we finally go into the detail, and Mustafa and Jose will discuss the details. Back to you, Michael. Thank you.
Thank you, Torsten. So now, yes, we are going to go into more detail about what the findings actually are. Before we do that on actual findings, Mustafa from the African Development Bank talk about the actual process of collecting the data and where we got this, what sources we have used. So I'd like to ask Mustafa, who's been involved in all stages of assembling the scoreboard data, whether he can describe how the data collection exercise actually adds value. Where is it that the scoreboard now provides new insights and not provided by others? So over to you, Mustafa.
Yes, indeed. This section, we provide an initial overview, the results and outcomes, evaluating the work done so far under the first pillar of this initiative. As an upstream preparation phase and ahead of the scoreboard presented today, there is a heavy chain of collecting and processing data. This kind of knowledge platform designed for the long-term finance project is based both on identified data or indicators already available and gathered from various specialized international databases, what we call here secondary sources. But above all, the platform relies on a direct statistical survey monitored by the Bank Statistics Department across the African continent. Practically, the survey was conducted during the second and third quarters of 2018. And since we deal with rather structural data, the survey spanned the period 2013 until 17. The questionnaires were sent to around 90 national and sub-regional institutions, targeting mainly central banks as the monetary authorities and also institutions regulating insurance activities and capital markets in African. For purposes of quality responsiveness, the survey counted on the bank network local points at financial sector regulation. So unlike some cases of statistical survey conducted by other international organizations, data collection for this project was not carried out through local consultants who were paid for this. So we would like to thank our respondents and to compliment their spontaneous collaboration. We hope they will take ownership of this scoreboard. Move to the second slide, please. So in order to get an idea of the survey coverage and to illustrate its place in feeding the data platform, we we can raise first that a major advantage of the scoreboard, as mentioned before, is it constitutes as a centralized platform of various indicators capturing the long-term finance intermediations and to compile different information. We can see also that indicators coming from the survey are almost half of the core data set of the scoreboard. At the same time, country coverage is relatively variable and depending naturally on the type of indicators as shown by the graph in the right. So if we have maximum coverage on some indicators from secondary source, it's simply because they are socio-economic and macroeconomic indicators. Next slide, please. With regard to the underlying dimensions of the conceptual framework, it should be noted also that capturing the depth aspect of long-term finance mobilization circuit strongly benefited from the survey's results, as shown by the green bar. And while the other dimensions the survey allowed.
Hello, Mustafa. This is Mohammed from Making Finance for Africa. Can you please get closer to the mic? Losing you.
Okay.
Thank you.
Okay, thank you. So, in addition to many other benefits offered by the scoreboard, and which will be presented later, such as the benchmark exercise, I would like to pinpoint that some financial indicators relating to Africa circulate in several documents and reports. But they are rather qualitative assessments provided when we hear that or we read that African financial markets are shallow and so on. Also, data are sometimes derived from rough and coerced estimations induced by insufficient country coverage. As will be seen later, among the advantages of this data platform is that we have now the ability to put figures on some standard ratios and even to provide more robust estimates. Thank you, Michael. I leave Jose to continue the presentation of this section.
Yeah, thank you very much for presenting some of the advantages from a data perspective of the coverage provided by the survey we've undertaken. Yeah, now I think we need to move to Jose de Sousa from the Norwegian School of Economics, who has been the expert analyst on this team since we first embarked on preparing this project, i.e. long before we even started collecting any data. Jose, can you describe the structure of the data portal and tell us where the findings we have so far in this pilot phase are new, i.e. what is the value added we have here? Where do we have something to say that others are not saying already?
Thank you, Michael. I surely can do that. Jose here. Mix the introduction of the structure of the data portal with some key insights. I'm going to be talking about sections of the portal and giving you some key insights that we get from each of the sections.
Can you speak closer to the mic, please?
Can you hear me now? Can you hear me?
Yes, it's fine.
Okay. So next slide, please. So you can see here the homepage of the data portal, and you can immediately see the structure of it is following directly what Thorsten has been talking about. On the left side, we have the sources of long-term finance, which we further split into domestic and foreign sources. On the right side, you see the uses of long-term finance, which we divided into investment and business. Connecting the two, we have the intermediation sector, the depth of the long-term finance, banking sector, institutional investors and capital markets. And underlying all this, we have the enabling environment, which we further split into business environment and regulatory framework. Our goal with this data portal was to create an interface that was user-friendly and that would be adaptable to different preferences from different users. And that's why we created two different types of interfaces, the LTF Scoreboard and the LTF Data Browser. Next, please. So what do these two interfaces do? So on the one hand, we have please. Yeah. On the one hand, we have the LTF Scoreboard, which is more of a standardized comparison of different countries and different indicators. We include in this interface 4 different, the LTF Radar, Africa Key Trends, Country Profiles, and Benchmarking tool. If you're a user that's more interested in a general overview of how a country stands in terms of all types of indicators, you can use the LTF Radar. If you're more interested in averages across the continent, you'd rather be using the Africa Key Trends. If you really want to zoom in into how a country scores on different types of indicators, you'd probably be using the country profiles. And if you want to compare countries to each other, you'd probably want to be using the benchmarking tool. The second interface is the LTF Data Browser, and this is targeted towards users that would like to create their own graphs using their own selected indicators and selected countries. So it's quite a flexible interface that allows you to create graphs on according to your own demands. Next, please. So going into each of these different tools, we start with the long-term finance radar. It's a radar that shows you how a country ranks across different types of indicators and relatively to other countries in Africa. And it allows you to very quickly identify weaknesses and strengths for this country in terms of long-term finance. The structure of the radar is the same structure as the long-term finance framework. So we have sources, depths, and uses of long-term finance and the enabling environment. And for each of these categories of data, we've selected 3 indicators based on the representativeness and data availability of these indicators in order to give a broad overview of how a country stands. So for all countries, we present also the Africa average. That's the dark green line in this radar. And we standardize the data so that when you look at each of the indicators, you can see whether a country scores more towards the center of the radar, indicating that it is in the low tail of countries in Africa in this indicator. Towards the outside of the radar, you have the countries that score higher on this indicator. So in this particular case, in this figure, you can see how Kenya scores relatively to other African countries in terms of each of these categories. You can see that it's scoring higher than the average African countries in terms of the enabling environment, the government bond market, and loans for own purchase. And it's scoring more or less the same as other African countries in terms of all other dimensions. So LTF Radar gives you a very quick overview of how a country stands in terms of all indicators. Next, please. Into how Africa in general scores and what the key data insights were for us when we were constructing this, we can see that the enabling environment variables have high values. It indicates that the level of development of the enabled environment is actually capable of supporting higher levels of sources, depth, and uses of long-term finance than what we actually observe. At the same time, we see that domestic savings are also quite high, which doesn't surprise us because it shows us that domestic savings should be the mainstay of long-term finance promotion. Next, please. Going to the second tool included in the data portal, the Africa Key Trends. With this tool, you can look at aggregate data for the continent and you can compare it to other regions outside Africa. So this Africa Key Trends tool is organized in the same way as the country profiles. So a standardized table that shows you for different indicators what the levels are in Africa and then compared to other regions of the world. These are averages over the period of 2013-2017. And then under the table, we always have a graph that shows you how this data has evolved over time. Please. Be talking about some of the key insights that we didn't have and that we have now based on these Africa key trends pages. And I'm going to be talking about each of the 4 dimensions of long-term finance. The sources of long-term finance, what we see is that African countries are largely on foreign sources of long-term finance. Next, please. If we zoom in into domestic savings, we see that they are around 18.5% of GDP and lagging behind the average of lower middle income countries. And in terms of foreign sources, we see that they are actually most of them in line with the average of lower middle income countries. And official development assistance is actually even higher than the average of lower middle income countries. So domestic sources seem to be lagging behind the foreign sources. Next, please. In terms of depth of long-term finance, when we look at the banking sector, the institutional investor sectors, and the capital market sector, we see that the insurance sector is more or less in line with the average of lower middle income countries. And this is quite new data that we are getting here. In terms of banking and capital markets, we see that African countries are lagging behind. Next, please. So again, private credit to GDP is 10% below the average of lower middle income countries approximately. Next. And next. So the institutional investor sector, more particularly insurance sector, we can see it's in line with the average of lower middle income countries. We're planning to expand this institutional investor section with also some information on pension funds. And capital markets, if you look at government bond market capitalization and stock market capitalization, they're roughly half of the percentage of lower middle income countries. Next, please. Moving on to the uses of long-term finance, what actually stands out is that the proportion of long-term credits is still relatively low in these countries. We're talking about credits with a long-term maturity, which is defined as 5 years plus. So if you look at the percentage of long-term bank loans, see that in Africa in general, they're about 18.2%. However, there's a wide dispersion among different African regions. Central Africa has a proportion of 2.8% of bank loans being long-term, whereas in East Africa, these are as high as 41%. You can also see in the table that in the figure that long-term deposits have remained relatively stable over the past 5 years at around 14%. And that long-term credits have been increasing and are now at around 10% of GDP. Next, please. In terms of enabling environment, we've already seen that the enabling environment seems to support a higher level of sources and uses of long-term finance. What we see here is that in terms of ease of doing business, when we look at the doing business indicators, African countries are still lagging quite behind the level of OECD economies. However, in about 50 to 60% of the countries, there are several regulatory frameworks aspects in place, like property registry or mechanism funds that targets long-term financing or credit, international auditing standards, and so on. Next, please. Moving on to the third tool that we have in the database. These are the country profiles. So if you really want to zoom in into a country and how it's scoring on the different indicators, you can use this section. Countries can be selected on the left side of the data portal, and the structure of this section of this tool is exactly the same as the one of the Africa key trends. So for each indicator, you can get the average over the period 2013-2017 for the actual country, for its region, and for Africa. And then when available, we also have the benchmark value for a certain indicator, which I'm going to talk about later. Next, please. The importance of looking at these country profiles instead of looking at African averages in general is that the African average is quite misleading in terms of what's happening in each country in particular. On the left graph, you can see how dispersed the data is for each of the several indicators included in the data portal. If you look at private credit, the first one, for example, you can see that the first quartile of countries, so the countries with the 25% of countries with the lowest level of private credit, actually have a private credit that's less than half the private credit of countries in the third quartile, so the top 25% of countries. If you combine the country profiles with the LTF Radar, however, you can have a much better picture of what's going on and also a broader view of how these indicators compare. Next, please. The benchmarking tool is a tool that provides a synthetic comparator to a global sample of countries based on regression analysis. What we do here, and you can see an example of this in this picture, which is showing the investment financed by external sources as a percentage of GDP. For each country, we have the observed value of external investment. That's the green bar. And we have another bar, which is the orange bar, is the benchmark value based on these regressions. These regressions take into account the GDP per capita, population, dependency ratio, old and young of a country, and several other variables described in the below the figure, and they allow us to predict what the level of external investment should be based on these characteristics. So if you look at Guinea-Bissau, for example, we can see that the benchmark value is much higher than the value that we actually observe for this country, indicating a gap, and that gap is represented here with the red line. So all countries on the left have a positive gap indicating that their benchmark value is lower than the observed value, whereas countries to the right of the graph actually have a negative gap. And what that means is that we actually observe higher levels of investment financed by external sources than what we would have expected based on the structural socioeconomic characteristics of the country. Next, please. One of the things we're struggling with right now is that we actually don't have global data on several of the indicators that for which we now do have data on for African countries. So actually, this is showing the value added of the data we collected. And because of that, we're not able to perform these regression analysis on several of the indicators. This table is showing you all the indicators for which we were able to actually perform this exercise. And also in the second column, you can see the number of countries for which we were able to calculate a benchmark value. And then the third and the fourth column show the average and the median gap for the whole set of countries for each of the different indicators. And what stands out here is a couple of numbers. So for most of the indicators like private credit, insurance company assets, share of firm investment financed by external sources, adults with housing adults, the values are relatively in line with the expected gap values. So we see a gap that doesn't differ too much from zero. The numbers that stand out are government bond market capitalization as a percentage of GDP. There we see a negative 10.9% average gap, which shows that actually the government bond market capitalization is well above the expected values given the structural characteristics of these countries. This highlights the importance of this benchmarking exercise. We saw before that if we just look at averages and compare them to lower and middle income countries, government bond market capitalization seem to be relatively low, but if we take into account the structural characteristics of the countries, they're actually above expected values. Next, please. For cross-border lending, we also see a positive average gap of 14.8%. That also stands out. It means actually that cross-border lending is below the expected value. However, if we look at the median, we see that it's not much different from zero, indicating that there's a couple of countries that are pushing this average gap towards the upper bound. Next, please. So the final tool that I would like to discuss is the data browser. The data browser, as I said, is a much more flexible tool that allows for a user-customized search and analysis of indicators. You can select the indicators you wish on the left column of the data browser, In the center of the data browser, you have a heat map showing the levels of the indicators for all African countries, and also a little graph with the dispersion in terms of these measures. And then on the right side of the data browser, you can select the regions you wish, you can select the countries you wish, and create comparison charts that are completely customized. That's it for now.
I'm going to speak a bit about the next steps here before we open up for questions, which we're going to have to do very shortly. Otherwise, we're going to run out of the time we had allocated to this webinar. So I'm going to be very brief here, and I'd like to see the next slide, please. So we're just actually doing the first point on this slide, which is to hold this webinar, which is to launch this whole data portal. We are now looking very much to gather feedback from those who might go into the site and try to use it, because obviously, if this is going to be any use to our main objective, which is to increase the knowledge of long-term finance or the lack of it in Africa, then we have to be in contact with users. So this is an opportunity for you who are listening, and it's also an opportunity for us. We are then going to engage in designing a questionnaire for a second round of data collection. And as you can tell, that's a very important step because, again, the feedback will be important to that, but also just making sure we are going in the right trajectory there. So we're about to develop that questionnaire. We've already, in fact, started developing that questionnaire. An important aspect in the further work will be to improve the access to the data, the way it can be used, the functionality of our data portal is maybe not the best way of going about that. So we are designing a website, and that website will be launched, we hope, within a few months. Again, that should make access to actually get to using the data easier for those of you who are trying to use the information we have collected. We are also going to hopefully publish the outcomes of what I spoke about very briefly earlier, which is the country diagnostics, which tell you about in individual countries how we can address some of the issues that are identified by the data. The two first countries in which we have undertaken these country diagnostics are Côte d'Ivoire and Ghana, and we are about to launch into doing the same thing in Morocco. I would like to, I think, move fairly quickly to some of the questions being asked here. And I see there are some questions coming up from some users, and I encourage anyone else who is listening who would like to ask questions to post them in the chat box on the which you have access to. So I think I'd like to do that because otherwise we will run out of time before we even get to the questions, even though there are many other things which I could say at this stage, which I will not do. So we have a question from Pierre Champ-Savoie asking us whether can we consider long-term finance compared to the structure and origin of countries. I don't know if I understand that quite rightly. Country debts, what's that? Debts, does he mean that? Perhaps debts is what was meant. Can we consider long-term finance compared to the structure and origins of countries' debts? And do you consider the prism of UN SDGs to build analytics? Torsten, can I ask whether you have comments on those questions?
I mean, on the first one, so I think, I mean, these are very, very relevant questions. And I think as we get more data, so as we have now this first round and hopefully the future rounds, I think there are lots of very interesting and policy relevant questions to be asked that these data can be used for. I mean, we have this old discussion on Francophone versus Anglophone versus Lusophone countries, the discussion on what is needed, what kind of institution policies are needed for finance. And I mean, I don't have any answers for that, but I think the kind of questions that we like to address with the data that we have available now.
Question comes from Rano Rataiva. I noticed that the slide on the structure of finance, short-term, medium, and long-term was only using African comparator regions. If you have this analysis using non-African countries or income levels, and as yet, I guess the answer is no, but the question is again very relevant. I'd like to also say in that context that one of the questions which hasn't come up, but I'm sure is in the back of some people's minds, is what do we mean by long-term finance? And we've actually had a long discussion about that. We've taken a fairly flexible attitude to what we think is longer term. So for an enterprise, longer term may be over 3 months, but obviously for an infrastructure project, in which we were talking about in one of the slides, 5-year finance is really not very long term. The idea of long-term finance is, so to speak, what is suitable to the productive needs of the economy, and that varies from sector to sector. So yes, we haven't done that yet, but it's a good question to have in the back of our minds. Then I see there's a question from Peter O'Flynn. Additionality, given that academics, etc., is useful for data, what are the download capacities planned? I give that question to Mustafa or Saidi. What do we have an answer to that question at this stage?
Thank you, Michael. On the data portal, we have the possibility to download all the data in the scoreboard, so with an Excel file.
Okay. Then if that's all we have to say about that right now, I guess that's going to come up in the context of developing the website as well. Paddy Carter asks, he'd like to know more about the supply of outside equity across Africa. Can you comment on what data you have enabled you to say about that outside equity? Jose, would you like to answer that one?
Yes, I can answer it. I don't know if what's meant here with outside equity is private or public equity. So we have quite some data already on public equity, and we're planning to expand that. In terms of private equity, we also have some data, and we're also planning to expand it. But as I said during the presentation itself, the levels of equity across Africa are still quite low compared to other low-income countries.
Yes. And then from Matthias Altmann, to what extent and how is the long-term finance provided by development finance institutions and through other donor programs such as the EU External Investment Plan captured in this database? The answer to that, I think, is that it certainly should be captured in this database. That this is, of course, a very important aspect of this exercise. I think we need to bear in mind that much of long-term finance is not currently being provided by the private sector, but is actually provided by official sources of one sort or another. Anything to add to that, Jose?
Yeah, I'm back here. No, I think that's what you just said. I mean, I think I don't have anything to say. Okay.
I'd like to ask Thorsten a couple of questions about this whole effort, just to finish off anyway, if we're not getting any more questions from the participants, and just to finish the session, if you like. Given the experience, what is the best way forward to make this data on long-term finance more prominent and more transparent in the region? We have already got a public policy agenda, if you like, a quasi-public policy agenda in the back of our minds, that greater transparency, more available information will create confidence and trust, and therefore stimulate more, if you like, it's like a virtuous cycle, that we'll get more finance coming out of that and then more information. Thorsten, have you got any comments to add to that?
Well, thank you, Michael. So I think, I mean, I see this very much parallel to, and you mentioned this earlier yourself, to the whole financial inclusion debate. I mean, 20 years ago, we didn't know anything about financial inclusion in Africa. And then over time, an enormous knowledge base has been built up, which allowed, of course, not only lots of analysis and research, but also, of course, helped us put this on the top of the policy agenda. And I think I have something very similar, I hope for something very similar in this context. And we know there are enormous gaps in infrastructure, in housing, in long-term investment by firms in Africa. And for this, we do need long-term funding. So getting a picture of how much funding is out there, what sources are there, and how can we help to increase the long-term finance will also kind of hopefully inform both the public policy debates, but then also policymakers and other stakeholders directly to address these challenges. So I remember from my time in the World Bank, somebody once said, if you want to reform it, the first thing you have to do is to measure it. So now we are at the stage of measuring it. Hopefully the next step will be to analyze it, and then finally, hopefully, turn it into policy messages, into policy reforms, and ultimately see the progress that all of us want in long-term finance. Thank you.
I very much agree with that, and hope that we also have started a process which we will sustain. Because one of the aspects of long-term finance, I think we can agree on, is that it needs a focused effort, and needs an effort which we can sustain and be able to build on. So this is just the beginning of a process, and it really is a pilot we've shown you today. And the further work, as outlined in this slide, which is still on the screen, is going to be very important to convincing outside parties and outside users that this is a worthwhile effort. So I hope this has given some perspective today to encourage those who are listening to contribute further and to continue providing their questions to us. In the last page of this presentation, I think the email addresses of all the parties who are involved here are going to be included in the PowerPoint, which will be sent to you as well. So you can actually write to us with your suggestions, even if you haven't been heard, so to speak, on the 1-hour webinar, which is now running over by 1 minute, I see. And the question's just been asked about which other country diagnostics we envisage. And that is a question, I think, which was also on the back of our minds as to how we should use that tool and how we can further develop that tool. But that would be the subject, I suggest, of a new webinar, which we could have at a later stage. But certainly the expansion of that kind of diagnostic tool, and not only the diagnostic tool we've developed, but also introducing onto the web page, once we have it, more information about what is out there on long-term finance in Africa, assembling that in one place together with the data will hopefully make this site more user interesting in the sense that it's not just a data portal, it also provides guidance on how you go about trying to strengthen long-term finance, and therefore will be of use not just to the policy makers in the countries where we do the diagnostics, but also to those where we might do them later and who could learn from what has already happened in the cases we can illustrate, so to speak, with the diagnostics we have undertaken. Yes, so I think getting in contact with the team is possible using the emails provided, and we will also make sure that on the portal, I think we need to include some more information about how we can be contacted, so that more information can be provided to anyone who accesses the data portal, if that's not quite clear already. I'd like to leave it there for now. I don't know if there are any other comments which someone urgently wants me to address, or which I have omitted to address at this stage. So I will thank you very much for attending, and we would really like to hear from you, and not just through this chat service here, as I said, but also by either writing to us by email, and or we will also have to try to make this more accessible, kind of comment function more easily accessible to anyone who enters the portal, I suggest. Thank you very much for attending, and I hope you found the session useful for your purposes. Thank you.